This week, there's something super fascinating going on. It's part crypto, it's part COVID, it's part billionaires getting killed. There's trillions of dollars at stake. So if you have money in the stock market, this absolutely can impact you, especially because some people think it could take the market down this year. Stick around and we'll get to it. RC Peck with Fearless Wealth. And I want to talk about how China is approaching technology versus how the US is approaching technology, because they are going at it in a very different way. China has cracked down in a great way against crypto mining, against technology companies, against digital pay. And what I want to do is explore not only how it's affecting the Chinese stock market, but how it's actually affecting the world stock market. And there's a lot to unpack in this story, and we're going to, of course, do it with price charts. So let's get into how that's affecting crypto, how it's affecting technology, how it's affecting the overall technology space and the stock market. And whether you have money in China or not actually doesn't matter, because China, being the second biggest economy on the planet, is going to affect everything and could, I don't think it would happen, but could actually pull the market much lower than it would need to go. So what I want to do is jump into the price charts and really look at what China is doing and how it is affecting you, regardless of where you live in the world. Okay, so what I want to do is go over to some price charts. And guys, there's so many different places where we can start this story. And we have a lot to get through, so I want to move through this. So the first thing is, let's just look at FXI. This is a US ETF. It's called the iShares China Large Cap. Let me get this as bright as possible. Large Cap ETF. And the thing I just want to point out is there's the trade war top over here. That's the trade war top where Trump came out and said, we're going to have a trade war with China. Now, again, this is FXI. This is priced in US dollars, and we'll just start the story here. So we did. Chinese shares did break out above that trade war high finally in 2021. And they did a pretty good job from the COVID bottom. Actually, as I look at this now, they did not do that good of a job from the COVID bottom to where they peaked. They were only up about 60%. In reference, the NASDAQ was up about 100% during that time period. So they were definitely getting affected then. Let's just then look at the actual index. So this is the Shanghai Stock Exchange Composite Index. And there's no currency issues in here. There's no dividends getting reinvested. This is just pure the index. Just call this the Chinese index. Now, here is the trade war high here. And so the Shanghai Stock Exchange is literally right back there. And from the COVID bottom to the peak at the beginning of the year, the index itself was up about 40%. Not that good. So definitely what the Chinese government is doing is absolutely hurting the Chinese stock market. Now, here's the thing. It's not cratering it. It hasn't crushed it, but it has certainly limited it from going higher. So the Chinese stock market is absolutely limited from going higher. And if I zoom really far out, this is looking at what we're looking at, 12 and a half years. And this is the Shanghai Stock Exchange. And you can kind of see here that it's had a really big problem staying above this range called 3,300 to 3,600. It's really had a big problem in staying above that range. Now, it's attempting to get above it again. So we'll see. Now, if it does break higher, with China really cracking down on cryptocurrencies, crypto mining, crypto trading, technology companies, Alipay, which was owned by Ant Group, then that's really strong. And it looks like China then might have the better approach to technology. So what's going on is China has such a different point of view of managing technology companies and technology than the US does. And I'm really just looking at the US versus China here. Those are the two things I'm looking at. And so what China does is they're tracking and tracking. They are actually tracking. That was a Freudian slip. They're tracking and cracking down on technology in a much different way. The first time I really heard about this was when I read a 2011 article talking about how Chinese billionaires are dying at a very fast rate, one every 40 days. Something like, at the time, there were about 115 billionaires in China, and 72 had killed themselves or had unusual deaths. That's a pretty big number, 72 out of 115. So that was like, wow. And the title of the article, if you want to go look up, was Friends Don't Let Friends Become Chinese Billionaires. So that was kind of the first I saw of it. That was back here in 2011 here, where something very weird was going on. Okay. The other thing I want to show you is just, let's look at two things here. This is, the blue line is the NASDAQ 100. Okay, QQQ, which most of you have heard of. But there's also a, let's call it a Chinese NASDAQ 100, and that's the red line. And what I want to most point out is, for the most part, they were kind of going in the same direction. If you see here, the bottom of March, and I can even kind of show you this right here. They were kind of moving in the same direction here. March, the bottom of COVID, they were moving higher. In fact, China really started to accelerate. And then something really happened in February of this year that really stopped China kind of coming back from behind. And the reason I started off just back here is just to show you that China was actually doing pretty well, making its way higher, and then something happened in February this year. And I think it's a culmination of a lot of things that's going on in China. So for one thing, China said, hey, Jack Ma, you can't talk negatively about us anymore. Jack Ma founded Alibaba. Let me throw up Alibaba on the screen here. So he was what's called disappeared for 3 months. No one heard of him from, say, November of 2020 to January of 2021. So about 3 months. Just imagine if no one heard from Elon Musk and Jeff Bezos and Warren Buffett combined, right? There's not many, billionaire figureheads in China, but just imagine if all of a sudden you've got Elon Musk tweeting every day, and then all of a sudden he goes silent for 3 months, whether it's Elon Musk or Bezos. That's what happened to Jack Ma. Now, this is the company he founded. This is Alibaba Group Holdings. And this itself peaked in right there, October of 2020. That's when he disappeared. And he came out of hiding right around here in January. So there was a little sentimental bump, but Alibaba has been falling. And since Jack maybe overstepped and Xi Jinping did not like what he had to say, Alibaba is down 34%. Just a quick reference from that October 27th. If we just put in, let's just put in, I don't know, Amazon and see what Amazon did. Just as a reference, Amazon did slightly better, up 10%. So up 10% is Amazon, down 34% is Alibaba. It's a pretty big difference. So there's a lot going on in China. There's a lot of, we don't want you to do this. The Chinese regulators saying, we don't want you to do this. You're not allowed to do that. So Alipay did not IPO. It did not IPO. That would have probably made Jack Ma another 70 or 80 billion dollars. That's no longer happening. China, the Chinese Communist Party did not like the idea of Alipay, owned by Ant Group, having just so much power over the 800 million subscribers. 800 million subscribers. As the population of the US is 330 million. So that's about 2.5 times more than the entire population of every woman, man, child, baby, 100-year-old in this country. 800 million people use Alipay. And the Chinese government said, no, it's not going to happen. And we can see just with Alibaba, let's go back to that, it's really affected that. So the Chinese government is really cracking down on technology. Now, they also cracked down on DiDi. Now, you could buy DiDi, and this is actually, let me zoom in on DiDi just a little bit here. DiDi is basically the Uber of China, and it IPO'd at the very end of May. And you can see the price. So it opened, let's see, since it opened in its IPO, it's down 34%. Not that good. So it's down 34% from its IPO. Now, what happened was the Chinese government said, hey, DiDi, you've got to take your app off all the app stores, and you're no longer allowed to get any more users for your ride hailing service. So they've stopped the progression of that. But again, this is Uber. Now, at the same time, let's just look for reference. So this is June 30th, down 34%. If we put in Uber during the exact same time period, June 30th, down about 9%. So DiDi down 34%, Uber down 9%, 3 times worse. So something's going on. And really it's the approach of how China is approaching technology companies and cryptocurrencies and how the US is. The other thing I want to show you is just actually, let's just look at crypto here because let's see, let me get the times right for you. Kind of May, June, not too long ago, May, June of this year, China said, you know what, no more crypto mining. And about 90% of all the crypto miners in China got shut down or were shut down. Now, to put this into context, about 65% of all the Bitcoin mining in the world is done in China. So that's a lot of mining that's been taken offline. Now let's bring up Bitcoin and let's just look how this has affected Bitcoin. So May, June, so we got April here. So May, June is kind of right there-ish. That's May. And you can see when China starts saying, you know what, we don't want crypto mining. In fact, they've gone after crypto traders too. That has really accelerated. In this case, this has affected people way beyond China. Anyone who's been in crypto, really since they clamped down on it, crypto since that time period is down 37%. We're hearing a lot of negative 30 somethings, negative 34, negative 37, negative 38. So China cracking down in crypto is affecting people all over the world. What's at stake is the SEC, the governing body in the US that attempts and helps to keep a legal, clean playing field, says, look, there's about 248, let's round it, just easy math, 250 Chinese listed companies in the US. What the SEC says, we want to be able to see 3 years of basically GAAP accounting. We want to see 3 years of numbers, and we'd like to use our, auditors to see that. And the Chinese government's like, nope, you just need to take our word for it. So what could be at stake is those 248, 250 companies could be delisted. I don't know if that's going to happen. It's $2 trillion in market cap that would get delisted. I don't even know how that would look. The thing about the US and China are we are competitors, but the US does not go to war with countries that have McDonald's in them, let alone Apple stores. So this is not going to turn into a hot war. It's definitely going to turn into a competition that has already happened. So it's going to be really interesting to see how we watch this going forward. And again, I want to go back to, let's just look at this. I want to go to year to date so we can just kind of get an idea of what the Shanghai stock market has done year to date. Because again, we're about halfway through this year. Shanghai stock market index up 3%. I'm rounding here for the year. I have to say, not that bad. For reference, let's just do emerging market. For reference, let's see what emerging market here during the same time period up 2%. So a little bit better than emerging market. Now, if you look at emerging market ex China, so if you look at the screen here, I find this fascinating. This is emerging market. So emerging markets themselves, no dividends included, just the index is up 2% for the year. If you take China out of emerging markets without China are up 6% for the year. So clearly China is the entity that's really pulling down emerging markets, obviously pulling down Southeast Asia. Now, we don't know if their approach is going to be better long-term than, say, the US, which is kind of, laissez-faire. We'll just let Amazon, Google, Facebook, Microsoft, Apple kind of do their thing. It's pretty impressive considering these companies, Apple's worth $2.4 trillion. There's probably about 7 companies in there if they were to get broken up. But bottom line, China is going after crypto. China is going after technology. China is going after tech billionaires, and it's affecting everyone. We don't know yet how it's going to affect the entire world. What we do know, it's definitely affecting international markets. If you look here, this is all world ex-US. Now, this is an actual tracking symbol, so it includes dividends reinvested. But just for reference, the whole world year to date, including dividends, is up 6%. If we were just to do SPY during the same time period, that's up about 14.5%. So China's definitely dragging down a lot of things that are going on. And it's super important because it's going to affect everything. It's more of an anchor. Now, as you look here on the screen, you have SPY, so it hasn't really affected that much. But SPY is really the total market. If I give you the total market of the US this year, it looks almost the same here. So this is all the stocks in the US. It's a big experiment, right? Because maybe long term, the Chinese approach is better to get control over ride hailing and payment plans and crypto mining and crypto trading, right? Because that probably hurt China itself. They don't want to lose control. No one is elected to government in China. It's appointed. So it's a much more fragile system than the US. The thing I'll say about China is, let's just remember this is the Chinese government and not the Chinese people. And it's an important distinction to make because I was an Asian studies major. I lived in Asia for many years in my 20s. My senior thesis in college was the first American joint venture in China. That was in 1985, and it was Jeep. Jeep went into China. They were the first American joint venture. And there was this understanding. The understanding was, you let us sell to China, and we'll give you all of our intellectual property. So really from the very beginning, now, the US and Europe and the rest of the world doesn't want to play this game anymore, but there's kind of this like, hey, I'll give you my intellectual property if you give me access to your entire 1.3, 1.4 billion people. The thing is, companies, people, the West doesn't want them taking their IP anymore. And it has gone from, we'll share it with you, to taking. And so a cleanup has to happen. It does not help that COVID started in Wuhan. It does not help that China has not been transparent with where the virus came from. Did it come from an animal? Did it come from a lab? They have not been open. They've been very close-minded, very close to the idea of sharing this information. A lot of research has been put into what could have happened if at least China was more open, like, hey, this just happened. Here's information. There's some reports that go back to May and June of 2019 where there was exposure. So there's that whole COVID thing too, because it came from China. Now, let's not point too many fingers, especially if you are an American, because the Spanish flu came from Kansas. I believe I always get mixed up if it's Kansas or Missouri. I believe it was a military base in Kansas. So we need to be clear about not pointing fingers. Now, that was over 100 years ago, but this is where we are today. So not only do we have technology, do we have a control over currency, do we have COVID, do we have Bitcoin? It's literally all coming together, and we have it showing up in price charts. And at the beginning of this year, China was looking good until it literally reversed in one day. And since then, call that mid-February, 4 months ago, China has not been looking good. The index itself is flat, so flat is not down, which is pretty impressive. But part of why that index looks good is because you can't really buy the index. You can only buy tracking symbols like FXI or EEM or other sort of tracking symbols, and it's very hard to get access to actual Chinese companies. And that, again, is more of the problem. The Communist Party wants to keep control. So I'll keep a look at it, but it's really fascinating looking at the price charts and seeing how they're really affecting the rest of the world. Thanks, guys. I appreciate you being in my world. And if you like this video, leave a comment. Tell me where you think I'm right. Tell me where you think I'm wrong. What did I miss? What do you think I got right? Leave a comment. I love responding to them. Also, too, please like this, ring the bell, do the things that YouTube appreciates to make them know that this is quality content. Also, too, if you like it, you'll love my free training course, Clarity and Control. It's in the description. Check it out. Thanks, guys, and I will see you on the next video. Okay, bye.